Alright, hello guys and glad to have you on board again. Today we will record a specific practice session around ranging contexts, which is terminated with the trend with more experienced guys right earlier. We're on Tuesday and we are going to record this thing each and every Tuesday, same old time. We're a bit of a delay in here. We were supposed to start at 3 p.m, so we're half an hour late, which means the session will likely be a bit shorter than what it's supposed to be, because I've got things to take care of afterwards. So sorry about that. We'll eventually be more on schedule by next week's update. Okay, so let's get it started. We are zooming in into the ranging context only. We're not talking and not mixing things with any trending context or whatever. So anytime we go out of our range context, we'll stop the analysis or change the time frame or change the asset, but we will not go down more experienced stuff. Okay, that's the things we were doing back then, where we were mixing all of the maturity and all of the context, ranges and trends, and that somehow confused a lot of you guys. So we're no longer going to do that shit. We're going to stick to the essential. Today is all about range, what you need to know in order to turn into absolute beginner, to be ready to mature your trading into understanding what range is all about, how to manage chaos into these ranges efficiently, and most importantly, how important this step is toward your further down the road progression into trading, because it's really a long shot, step-by-step stuff. And I'm sorry, but yes, I made you guys start with the most boring context, unpleasant context to trade, but this is where you need to start first. Trust me on this one. You'll thank me later. Okay, so number one mistake for range traders, we've always talked about that. It's in the PDF manual and also the first trading lessons regarding ranging context. Major mistakes people do in ranges is to pay attention to details and therefore trying to somehow fill the void, like making sense of chaotic structures, trying to understand the details, thinking that the market has left some mysterious fingerprints behind, some tips and tricks that if you're experienced enough, you're someday going to be able to make sense out of this and definitely finally understand what the market is all about, because that's what you wanted in the first place. Well, congratulations, you just fell for the first biases, which means you're trying to make sense on something that is just randomly chaotic, and you can spend as long as you want. You can spend as much energy as you want. Believe me, I tried for years and I've simply lost a lot of time. So I try to save you guys some precious time out there. Don't give a fuck about chaos. I don't know how long it's going to take for you to get to that conclusion, but you will get there anyway. So try to save yourself some painful neurons energy. Okay, just trust me on this one. Okay, so the little things you need to know about ranges in general are to avoid chaos. So the entire strategy and set of rules I teach you in ranging context are meant to do just that, to avoid you making sense of chaotic context, to try to find very few contexts in which you can have some risk limitation to be able to trade or to make sense of what's going on. Okay, anything aside from these things are pure chaotic structures in which there's not sufficient risk limitation to give any rational sense to any of the market moves. And of course, this is going to drive you crazy. You're there to understand what the fuck's going on, so anything that you cannot rationally put a sense to is just gonna drive you crazy, because something that you do not control is something you want to have control over. Okay, so just drop it. Drop it. It's not going to happen. You're not going to have control over chaos, and the harder you try, the more time you will lose. Okay, so the set of rules is meant to remove chaos from the equation. So how do we do this? It took me quite a long time to actually put it down to the simplest possible stuff that will lead you to remove most of ranging chaos by just following a simple set of two rules. These rules are mandatory initiative rules before going any further down the road of using all of the third range boundary context and so on. So before even thinking about, well, the context has reversed, the market has done this, we had these type of signal or whatever, before going down trading the context, Remove chaos. So how do we remove chaos? What are the two mandatory rules that you need to meet? And these ones cannot be bent. You have to follow them. It is black or white answer. There is no room for personal appreciation. What is the set of two rules that filter out chaos in ranges using my strategy? Can you please guys try to list at least one of them? Normally, most of you guys in here are experienced, so you know the rules, but okay, try me out anyway. Fibonacci is nope. Fibonacci's are things we use to trade the contexts or to define the speculative areas. So even before thinking about speculative areas, okay, think of it as a process, okay? The process is you're looking at a market, okay? What led you to this market, I don't really give, okay? We just need to process before going any further. I just got to this chart. God knows why I got into the 4-hour chart time frame. Let's assume that this is randomly plotted. I chose a market and I got to look at the 4-hour chart. This is where we are. Okay, so this is the input 4-hour chart reference on Atom. God knows why I've gone down to this choice. But now the only question I'm willing to answer is, do I need to trade it now? This is the end of our question process. There are lots of intermediate questions I'm going to have to answer. The first one being, I need to fulfill a set of two rules before going any further down the road. We're talking about ranging context only, okay? So every of the trending stuff, we're not talking about it. So for range traders and beginners, what do we need to fulfill as two core elements before going any further down the road to make sure that the 4-hour chart we're looking at is a tradable one, and to make sure that we are into areas in which we can look for contexts? No, the context is something that we're going to look for to find the speculative area. The third range boundary is a context we'll trade. Before even figuring out about, okay, so let's assume we are in ranging context, which means anyhow and anyway, there's only one thing you're going to be able to trade because there's only one ranging context I told you about, which is the third range boundary. Oh, damn it. Okay, 3RB in English. Sorry about that. It's the way we write it for French guys. Okay, so the third range boundary is the only outcome for you guys. Okay? Only thing you're going to be able to trade. So before trading ranging context, you need to fulfill the goddamn two sets of rules that allow you to open up this box. This Pandora box in which before trading the third range boundary, you're going to look at the context, the fibs, and so on. So the context, the fibs are rules that we're going to use to define the speculative area. If we ever get into the speculative area, then we're going to look at signals, okay? Taking profits, whatever. Okay, we're going to look for signals. And depending on those signals, we're going to trade or not. But before going down to this thing, there are two mandatory rules that we need to meet. What are those rules? Be sure we do not range into the high time frame. Great, that's the first one. Okay. Okay, so that is the first one. No range on the high time frame. That means anyhow and anyway, we're always going to have a look at the high time frame because we have to. What is the next mandatory rule if you want to give any rational sense to a third range boundary? No. Reversing the context and stuff like that is what we need to trade. The reversed context is how to find the speculative area. This comes down the road, not now. There's another mandatory rule that needs to be met before even thinking about applying third range boundary context. Sorry about that. So what is this second rule? Yes, we need a trend. The third range boundaries we care about must always be preceded by trends. Okay? That's what we want. Okay, so how do we define these trends in a simple manner? Okay, because you don't want to know too much about trends, you just want to have a sentiment that the market has trended at least for a little while before entering the range we want to trade. Okay, how do we validate this thing? Come on guys, try it out. I mean, don't be shy. Bad answers are only profitable for use. Okay, moving average. Yes, that's the one we're going to use, okay? So to make it plain simple, before going any further, before thinking about the fact that we've reversed the context and things like that, and that we're going from context to context, okay, we'd make it plain simple. We look at the moving average. The moving average is inside the context, okay? So we know that this is not likely a trend, because trends tend to have moving average outside of their contexts. So we make it plain simple. Right now, we're very likely in a range. Is it preceded by a trend? Yes. So the first rule is met. The second one, which one is it? Looking at the high time frame. So anyhow and anyway, I need to look at the high time frame. I go to the high time frame. Oh, damn it. Looks like we have a range. We're going from context to context in here. The context has reversed, so that is a range. The moving average, oh, the moving average is quite closer to the support context, and it's a rising moving average. So does that really look like a range? It looks a bit odd, right? I mean, regarding what you know about ranges, this moving average should raise some questions, right? It's not where you generally see moving averages in ranges, right? Normally in ranges, the moving average is really settling in between the context, generally oscillating across the median value. So in here we have a rising moving average. The moving average is actually accelerating, and it's pretty much closer to the support context. So if we trade that as a range, something looks a bit odd, right? I want you guys to be able to figure this one out. I don't want you guys to make any sense out of this. I just want you guys to gather the information. It is a range. We're going from context to context, but damn it, the average value, the moving average, is damn low in this range. We're not making any more sense of it, because this is something that we might use in trending context, which we're not going to do here. So we just gather the information, something's odd. So if I want to trade that range, I'd rather like to ask a yellow guy about what he thinks about what this moving average could mean. Okay, I want to get you guys to have these recurring processes. When something looks odd, ask for someone more experienced, because there might be an information you don't yet know about. But still, you're going to use your thing, okay? This is a range. This is preceded by a trend. Let's go for it. Now I know that there's going to be a third range boundary stuff to trade, or not. That depends on if prices will go to the speculative area, and once they get there, do we have a signal to trade? And so on, okay? So today, to make it simple, we're not going to go down the set of rules that we need to trade these third range boundary and so on. We're probably going to do it next week. But we've done the job we had to do, okay? Are we into the appropriate time frame to search for a third range boundary? That's a tricky question. There's a trap. No, we do not know yet, because we have to look at the higher time frame. Remember, the set of rule resets anytime you look at a chart. So we wanted to trade 4 hour. 4 hour cannot be traded because we are in a daily range. So 4 hour terminated. We can't trade that. No possible. Okay. But before trading the daily chart, we need to look at the weekly one. The weekly one, oh boy, certainly not enough information out of this. So we're gonna pass on this, okay? Not enough information. So it could be a weekly range. We don't know. We don't have enough information. So we pass on this one, okay? So weekly, not enough information. So we're gonna stick to where we were. Daily chart is our reference time frame to trade on. That's fine. So now we can apply the potential third range boundary stuff. Did we reverse the context? Yes, okay. Have we retraced to the higher time frame context? Yes, we did. Have we retraced at least 61%? Yes, we did. So that's pretty fine. Are we in a speculative area? This is not just rhetorical questions. I mean, I really expect you guys to answer. At least I'll feel a little bit less alone. Okay, yes. I mean, think about me for a second. I'm just standing in front of a condemned computer talking to a microphone, so try to make it more like human beings interacting with each other. So that would be a lot easier for me. Okay, so we are definitely in a speculative area. Now you can apply the context box as I teach you, okay? Each context box has its set of rules, and in ranging context, we've got 5 different options, okay? So remember what we've done so far, okay? We came up to this chart in a 4-hour reference. Using the 2 sets of rules to filter out the inappropriate context, we have switched to daily charts. This is where we were able to meet both of those rules. So this is a granted stuff to go beyond, okay? Then we have all of the necessary requirements to open our third range boundary, okay? So 3RB stuff, oh damn it, I'm sorry about the stuff. So this is the first time we can open third range boundary stuff. Now that we've opened this, we know that there are 5 alternative structures for this thing to show up. We know that there's going to be a third range boundary. This is not even a question. The question is, what's going to happen there? Is it going to build a bearish third range boundary? Is it going to build a neutral third range boundary? Is it going to squeeze the third range boundary? Is it going to neutralize like any other stuff? Like we go to squeeze the momentum, so we just do nothing but to contract the volatility. Okay, so we destroy volatility, we mature the range without meeting any other stuff. Or do we do anything else? Chaos, okay? Chaos will forever hit, and that's not because you've assessed the high likely probability of a third range boundary context to show up that it will necessarily happen. You know 4 ways in which this thing is supposed to happen. And you also know that anyhow and anyway, this can still be chaotic. Okay, so this can be trending range, neutral range, squeezed, delayed, third range boundary, or chaos. Are we all agreed with that? If you're still lagging with these things, don't worry guys, okay? It will come clearer as time passes and as we repeat that shit week after week. Okay, the process is always going to be the same. Meeting the first set of rules. If we do, then finding out which one of the 5 options is going to show up and how do we risk manage the probabilities of going from one to another. And that's always the way we do. And if we can validate one context to be probable, well, we're going to trade it. That's all about it. Okay? Most of the time, you're going to have multiple probabilities, though risk management, okay? That's why we wait for signals. So now let's put it into perspective, okay? Regarding the trending range, okay? The trending range, what are the sets of rules? To find the speculative area. Your job, guys, participate. I don't want these to be just lectures. Lectures are the trading lessons. We do practicing in here, so practice. What is the set of rules to find a speculative area on a bearish range? Not that complicated. Okay, minimum 61%. and you need to trade inside the context. Okay, so do we trade inside the context? And do we have at least 61% retracement? The 61% is in here. For those who don't use the indicators, you will have this pitchfork. And yeah, we're trading inside. So yes, can we meet the rules for a bearish trending range? Yes. Still, do we have the signals? Nope. We need trending signals and we've got neutral signals. So we still have signals, but not the one we want to confidently go into short selling this third range boundary. Okay? We need a more bearish signal that we don't get. So we've got multiple options. We can gather some other informations like this. Breakouts, that can help. Okay? That means the market is trying to accelerate to the upside, and if we are definitely in a range, that means we're likely going to build a range boundary out there. Okay, remember that breakouts normally in ranges, they act as slowdown. Okay, it's like glue. Normally prices are supposed to slow down in here and normally reverse. Okay, so we have some pros and cons. We don't have a perfect signal. So I would say in here we've got some yes or no, but it's not necessarily a red flag. That means you can go, but it's definitely not perfect. But anyhow and anyway, what comes after a signal before considering trading activity? What do you need before trading ranging contexts? Come on, guys. Don't fear if you put out some bad answer, it's no big deal. Yes, confirmation triangles. So in this context, we want the market to pull out a red triangle in the price charts. We want to have price reaction. Do we have such a thing? No, we do not. So we do not act right now. We definitely look at the prices. The price definitely matter because we are into a speculative area and we have early potential signals. We just have no price confirmations. So we wait. All right? Can it be a neutral range? So neutral range set of rule is closing above the resistant context and being on top of 61%, 76% Fibonacci's. So okay. All right. So if we go for a neutral range, that means prices have to do this. What's happening if we go right up there? If we close above the context, meaning we need to close above this, yeah, we'll be breaking the previous high point. So there is a very limited area in which we're going to be able to reverse. We need to make multiple candle closes in this area without breaking the previous all-time highs. That means, well, it's still probable, but very less likely. So I would say right now, at least in the current context, and context will evolve each month. So for September, the risks to see a neutral range boundary, well, I'm sorry to say, guys, very not likely to happen. Anyway, I don't want you guys to trade on double top structures, ever. You rather like to pass on this one rather than trading a double top. Some markets will double top. It happens, but it happens rarely, at least not enough for you guys to take that risk. What if we got something just below the breakout target and got a trending signal? Well, that's okay. That's okay for a bearish range. 76% is no problem. This is no mandatory. That doesn't mean, okay, this is just one rule that you need to meet. In order to trade bearish ranges, or trending ranges in general, means you just have to trade to at least 61%. That doesn't mean you cannot go above 76, for example. It's just, of course, that's better to avoid retracing too much. That's a sign of bearishness, to fail at 61. So the fact that we are trading 76 is not a good sign for the bears, but that's not a no-go. The no-go is just, well, we do not retrace sufficient enough. Okay, so this is just a rule that has to be met, and once is met once, we don't nearly care about it anymore. The thing is that, did we retrace at least 61%? The answer is a black or white thing. It's yes, period. Okay? There is no big deal if you retrace more than that. We just have to do at least 61%. Okay. So for neutral range, well, it's not going to work. For squeezed third range boundary, meaning that we just break through and make new high points, is it possible? Yes, okay, so this is one possibility of our market. The next one is, can we do anything else, like do something like we reject, but we fail to validate, and we just somehow go to squeeze, like we neutralize by squeezing the momentum. Okay, so we destroy volatility to the point that there is no momentum and there is no movement on the trend channel either. The trend channel gets so narrow that it prints us the squeezing pattern. Okay, squeezing pattern is, let me just find one, if there is such a thing. Okay, the gray trend channel. If the trend channel gets grayed out, that means the range is mature, and so on, and that we've missed the third range boundary. So all of the delayed third range boundary stuff, okay, they're still possible, but, well, we cannot profit from them anyway. So we're going to say this is not a no, this is not a yes, this is just a maybe, but not very likely. And can it be anything else? Maybe, but not very likely. Remember that chaos still exists, but we have to consider it negligible. Okay? So right now, our two options are this one or this one. Oh, boy. Sorry. I cannot erase it. So, do you understand what this is all about? Okay, we've got two options in our market, and they are, for now, both potential. So, how do we do that? How do we deal with that? Do we have enough information to trade a squeezed third range boundary? Well, certainly not for you, because anyhow and anyway, for you that's a no-go zone, okay? You cannot trade broken third range boundary because that is trending context, okay? So only trend traders could go further down the road of these possibility. So the only action for you guys would be this one. And the risk for you is that if you take this one, and if the market goes for this one, you're going to take a stop loss. Is that okay? And there's nothing more for you to analyze at that point. If you are white guy into the Discord, or green guy, meaning you're either fully beginning with the strategy or getting familiar and mastering the ranging context already and getting better at it by learning psychology and something like that, and getting early trend trading behaviors, okay? If you are at that level and you are able to do the exact same analysis that we've done in here to get to this conclusion that what we've done since the beginning, okay, the thinking process we've done is exactly this one, okay? We've gone 4-hour chart in the beginning, okay? This 4-hour chart, we tried to apply our two sets of rules. That is a mandatory use. The first one was met, the trending behavior. We had a preceding trend, but we couldn't meet the higher time frame range. Though what we've done is going into the higher time frame. Whoa, sorry about the number plotting. Okay, on this daily chart we were able to fulfill the two sets of rules, though we opened up our third range boundary stuff. Okay, and we try to figure out the probabilities that can be met. We are into the speculative area. The neutral range doesn't seem like a reliable outcome, so we have two options to risk manage. This one or this one. This one doesn't yet have enough signals for us to worry about, but we're definitely going to have a look at any price reaction. If prices react in there, even though we do not necessarily have the exact signals we want to trade with a full leverage, there is still a risk of downside potential. Are you guys able to make this analysis on your own? Yes or no? If that's a yes, congratulations, you are at least green level or higher. At least you're worth the green level. If you were not able to do it all together, like you were doing half of it, or you could have made some mistakes in the process, that means you are white and you just have to practice. Over and over and over again, sooner or later, these mistakes or lack of confidence into the decision-making process will dampen over time, and you will get just fully confident of doing these things on your own, independently. And when you're able to do it all together on your own, means you master the damn context, and that you now have to trade it with real money to get exposure to the damn biases that you will feel once again, because when you do not trade, it's easy to manage fear of uncertainty and impatience. But when you put some money in the game, you will feel those biases again, just like you did back then. Okay, the strategy will dampen their exposure, but that doesn't mean they won't show up again when you'll put some money in the game. Okay? That's why when you first trade these third range boundary, you certainly do not risk 2% capital on them. You just put a little bit of money so that it means something to you. You're going to feel emotions, you're going to make mistakes, but you certainly do not try to make money out of third range boundaries. This is not a profitable context. You'll never make money with third range boundaries. I'm sorry to say it. This is not a profitable context. This is barely average. You're going to make a little bit of money, but in the beginning you're going to make so much mistakes that you're very likely going to make no money at all. But the third range boundary is so essential and crucial to get further down the road into trading. We're going to need these third range boundary all the time later on. And most importantly, I need you guys to stop trying to make sense of chaos. And bringing you into the most chaotic structures first is the best possible way to achieve that. Okay? This is the whole process we figured out. So if you did it all on your own and be able to figure out these conclusions with all the details, knowing that the only thing we look for now is this, a signal, okay, or the market going to all-time highs. These are the two things we know now because we need to risk manage these two probabilities, okay? And you're just going to look for information that would tend to validate either this one or this one. And until then, there's nothing you care about, okay? If you want to go one step further, let's imagine that we get this triangle today or tomorrow. What would that mean? That you can eventually take the trade, but you certainly cannot take the maximum risk. So you would probably take a 1% risk in here. I mean, just look at the size of the trend channel anyway. So your stop loss is going to be goddamn expensive. So you're certainly not going to take a 2% risk on this market, okay? Next, what else do you know? If you ever take that trade, what's the next thing to come? Okay, take your PDF manual. Remember the grid, the decision grid. Okay, so You found out the appropriate time frame, you found out the tradable context, you found out the speculative area, you found out your signals, which means you took your trade. What's next? When you took the trade, what is your decision-making process? Okay, validation or invalidation. Okay, so your stop loss would be there. That would be invalidation. Okay, that would be mandatory stop loss and validation. Now, what are the things we look at, reliable signals, to tell you that you're heading into invalidation or that the market is likely invalidating your signals rather than validating them? That's in the PDF manual. Okay. Invalidation signs, that don't mean you have to exit the trade. That just, they are early signs that this simply doesn't work out as expected. So this is advanced green level. So all of the white guys, if you feel like you're lost now, absolutely normal. This is mature green level. Okay, that means you master the stuff so well that you're going to be able to plot the next move before it even happens. Okay, you're able to forecast the next probabilities depending on what could happen. Okay, it's really like chess players preparing for a two set of moves ahead. Okay, you're anticipating the potential behaviors. Okay, invalidation would mean the market will close above the resistant context, the resistant trend channel, and validation instead would be reaching out the support trend channel. You have the pace for this to be projected, so that would look something like that. Okay, that's the current trend channel pace. Okay, that's your trend channel's pace. So now you've got two options. Either the signal validates, and if the signal validates, there's only two things you're going to care about. Is this bearish potential signal tradable or not? That depends on what you want, but if you ever trade without the trending signal, can only be partial trade position. You certainly go down, you certainly can't go down with a full position sizing. Okay, so it's going to be a tinier trade with a tiny position sizing, looking at the fact that you cannot risk more than 1% for this trade, and look at how fucking big the stop loss is. Okay, so anyhow and anyway, it's going to be tiny position sizing if you trade that. Okay, then two things will happen. You don't know anything about the market's rhythm, but either you're going to go to the trend channel, which will be your next maturity stage for that trade. You're going to be validated, which means you're going to partial profit take and so on. What's the other option? Confirmation means closing. For a bearish range, confirmation is closing into the resistance, into the support context, so it's not going to happen. This one will always happen first. And invalidation is closing on top of our resistant context, which is going... Let's delete prices so we'll see it better. Okay, so the trend channel is going wild, but it looks like it's going for this type of shape. I'm taking the corners, okay, as reference anchor. So there are two things we care about. Assuming that we validate a bearish signal today or tomorrow, the only things we'll care about afterwards will be, does the market goes there, which will act as a validation that the market reversed inside the context, which is not that great, but not the end of the world either. And option number two, we keep up accelerating and closing on top of these things, which will be signs of invalidation. Okay? Sounds good enough for you guys? This is all just using ranging context knowledge in here. This is mature and definitely mastering of these rules to be able to forecast what the next move will be after this and this. So this is really for mature green guys, but for for white guys, if you were able to plot that whole thing all together alone, man, you really deserve the green level. Of course, doing it one time is not enough to assume that you really have the knowledge. You would like to do this multiple times in a row without making mistakes. But if you definitely do that multiple times in a row all alone, man, just claim for your green level. You definitely deserve it. All right? There's no more that you guys need to know. And out of 2 days podcast, what I would like you guys to at least make sure you won't forget is this set of rules. This is where most of you guys are making mistakes. So if there's one thing I'd like you, everyone today, to be able to do the next time without making mistakes is to find the appropriate time frame to suitably trade your range in context by just goddamn applying 2 simple rules that are black or white. There's nothing for you to gamble on this thing. It's really going to work or not, and there's no in between. Okay, is there any question, guys? Don't mind it. No one is gonna think your questions are dumb, but you. No one's gonna judge. Okay, so if there's anything like you're scratching your head about, like, man, he said this, but I'm not sure I really got it the right way. So, well, go for it, okay? Now is the appropriate time. If there's any shadow, any blurry stuff, go ahead. Otherwise, we're done. I mean, this is 40 minutes in, but like I said, this will be a shortened session today, and I've said everything I had to say. So if there are no questions, well, see you guys next week. It's really that simple. When do you take a stop loss on invalidation? Okay, so invalidation is a simple stuff. Though in here, we're talking about risk management, which means this is more for green guys, okay? Remember that there is a step for process to progress into trading with my strategy. When you are white, you learn the goddamn rules. You make mistakes, you do on replay trading, you try to get familiar with the patterns and try to avoid falling in the easier traps, okay? So you just practice to make sure that you get confident enough using the strategy all alone, okay? Then, once you're able to do this, you turn green, which means you're gonna start trading these things with real money, okay? You're gonna get exposed to this thing and start trading them because you know the pattern enough, you have confidence enough to try putting a little bit of money at stake. Not big amounts, okay? You start with the little tiniest position sizing possible on your broker, and slowly but steadily you increase without ever breaching the 2% maximum risk on these trades. Okay, are we good with that? That means what we're talking about now, these questions of when do we trigger the stop loss if we have invalidation signs? That means this is a question for green guys and above. Yellow guys, you shouldn't even listen to that question, okay? For yellow guys, what you care about, for white guys, all you care about is learning how to identify the right time frame you need to apply the rules on, find the speculative area, and look at the signal to define if you were trading or not on this area. That's all I need you guys to do when you are white. When you are green, you start diving into shaded gray territory. How big the position sizing is going to be, depending on the size of the stop loss. Are you going to take the maximum risk depending on the signals, or are you going to go for half the position sizing, 1/3, 2/3? Okay, this is where you start going shaded gray territory, because no third range boundary will behave the same. Signals will always be different. The behavior of the trend channels or the context channels will be different, and this will modulate the way you trade each and every fucking third range boundary, because there's never such a thing as a repeat in the market. The market never repeats, it rhymes, okay? So this is why you need to put some shaded gray territory. So now try to put yourself into context. Let's assume you've got your bearish triangle and that you take your trade. Anyhow and anyway, that will be a tinier position sizing because the signals doesn't align, but you definitely have some signals that there are some weaknesses out there, okay? So you can take that trade. You need a confirmation first, but if it does show up, I would agree with that, okay? That means afterwards, if you take the trade, like we've assessed, 2 options. Either you reach out the trend channel when you're going to risk limit, which means you will take no risk anymore. You will partial profit take and put the stop loss at the market top, which will very likely means that there is no pending risk of losses for you anymore, okay? Option number 2, the market keeps rising and closing above the resistance trend line. So, what do you do? Try to answer your own question. Try it out, okay? Don't fear putting some mistakes. It's just try it out. What would you do? Just try to make it rational, because you have room for personal appreciation, shaded gray territory. That means not every trader out there will take the same decision, but that doesn't mean you have a full set of decision. You're going to be limited to do some things, because first of all, you need to see candle closes above the resistance trend channel, which will be a sign that the market doesn't really want to go down. But what are you going to do with it? What do you do with that information? Okay, so that's one option, very conservative, but you would say, well, we're closing above the resistance trend channel. It means the market doesn't really want to validate the signals, so I'm going to take my loss. Instead of taking a 1% loss, which would be the market goes right up to 40, by triggering it like at 27.5, for example, well, you're going to lose 0.15%. Well, I'm okay with that. That's not a bad decision. That's really conservative. You wanted to have a good signal. You don't really want some chaos. The signal was imperfect. Well, if you want to take the stop loss immediately, well, I would agree with that. I wouldn't say that's a bad decision. I would say this is really, really a low-risk option to take a 0.15% loss, but to move on to another trade, which will get a better risk limitation. I would definitely agree with that. I would definitely agree with that. So that's one way to see things, very conservative way. But in that perspective, I would say that this would be representative of one bias that you don't know yet about. But to me, that makes no sense in a management side, because that means you took some risks getting into a trade with, well, not that great of a risk limitation. And you're going to go do what? You're going to get out just because it shows signs of weaknesses? Well, this was a weak signal. So if you decided to trade, I would say exiting just because there's one candle close above the market resistant context, trend channel, well, I would say that doesn't really look that smart of a decision. So I would say if you ever take that trade, well, I wouldn't exit just because of one candle close above the resistant trend channel. But I would say closing a closing a trend channel expiration. Remember, trend channel is one step above. So trend channel updates itself each and every week, and context 2 time frames above, though each and every month. So I would say, for example, if we close a week above the trend channel, I would say that's not a good sign for me. We're not just closing daily candles on top of this resistance trend channel, we're also closing the weeks at the high. That would be a sign that, damn it, the market really wants to go higher. And in that perspective, I would say eventually this would be a sign that the market just doesn't want to reverse out there. That would seem like a more rational approach to me. Do you see the difference? I'm always following the sets of rules. I'm only using the things I know, and I'm just putting them into different orders depending on my personal risk aversion. Those who are risk averse will probably do nothing and don't give a fuck. I've got my stop loss in here, and if the market goes there, I'm losing 1%. And if the market goes there, I'm going to take 1%, period. That's going to be that easy. I would definitely understand all of these choices, because there's one thing these guys do. They follow a process. And they repeat it. How aggressive you take your trades, I don't mind, actually, as long as you always do the same thing. If you're always aggressive, means you're going to trade more. If you're very conservative, means you're going to trade a lot less. And to be honest, I don't give a fuck. You can do both. What I like is to you guys to adapt. What I want you guys to do in the end, if you want to turn out profitable traders in the long run, okay, meaning learning trend trades and so on, the best traders I've seen are the ones that adapt the most. Those that can be aggressive when there are reasons to be, And they can be very conservative and defensive when there are good reasons to be as well. But the reasons must not be because I feel this or I think that, but because I gather informations. Okay? So, to set that aside, okay, I'm going to close that video now. So, we do not necessarily go beyond. I've answered your questions and we've spread out quite some valuable content today. So, we're going to stop the recording at this moment now. And I'm keeping an extra 5 minutes for you guys who want to stay. And I'm going to show you what a professional risk limitation would be out there. Gathering information that you don't know anything about yet. But if you're asking the question, I'll give you the answer. All right? Is that okay? All right. So for the record and the replay, sorry guys, we'll stop it now. There's plenty of valuable information so far. So take that information. Anything we're going to do now hidden behind closed door is advanced stuff that you shouldn't even give a fuck about. You're going to learn them sooner or later if you're patient enough. Until then, well, focus on what matters to you guys. Progress following the goddamn steps of this strategy. Slowly but steadily, learning the range, learning how to repeat those same old rules over and over again, gain confidence, work on your natural biases afterwards, and progress toward trend trading. Bye, guys!